Okay, over to you, Ram. Thank you.
Yeah.
Hello, a very good evening, good morning, and good afternoon to one and all. My name is Ram Rakavan, and I head Government Relations for Visa. On behalf of the whole team of Public Affairs Forum of India, I have great pleasure to be able to welcome and thank all of you for dialing into this important conversation on rebooting the economy, a global perspective. Friends, as you are aware, we are in the midst of an asymmetrical pandemic recovery, and the economic rebound is uneven across countries. For governments, economic recovery and a broad-based economic expansion are central to their forward-looking agenda these days. Indian government has understood that without dramatic action, there would be long-term negative economic and social impacts. And therefore, the government seems to be working on an extraordinary response to an extraordinary prevailing moment. In order to discuss this and offer fresh perspectives on high growth economic trajectory, we have amidst us two stellar experts who needs no introduction. It's an honor to welcome Mr. Ruchir Sharma, who is a global investor and a prolific author. I also welcome Mr. Rahul Sharma, Managing Director of APCO Worldwide, and Rahul will be the moderator of the session, which is designed to be conversational. We also have Mr. Vishwanathan, who is former head and founding member of PAFI. Mr. Vishwanathan will give closing remarks. I request the audience to send questions in the Q&A box, which the moderator will access for the discussions. I now request Rahul to start his conversation. Rahul, request you to kindly close the session in time since there are back-to-back sessions. Thank you so much.
Thank you, Ram. Thank you. And a very good evening to all of you, and good morning. I know there are delegates and audience which is sitting in other parts of the world. We have had a good, fruitful day of discussions starting in this afternoon, and we continue all of tomorrow. So, thanks to people who have joined. We do look forward as PAFI to having you across also tomorrow. Uh, and it is indeed a pleasure to welcome Ruchir. Ruchir is an author. He's written several books. He is a columnist. He's an ideas man. He's somebody who has played an important role in creating ideas and thought leadership in many, many areas through his books and his writings over a long, long period of time. Uh, I've had the pleasure of knowing Ruchir for many years, and I've also had the pleasure of reading his writings. So, but let's talk about where the world is today with him, because that's something that keeps him awake and interests him a lot. So I'll start off with a question to you, Ruchir, very quickly. Uh, we know that the world is coming out of a once in a century event that has shaken just about everything. It's changed the way we live, we think, we behave, we work. So my question to you to start with is that when the world was hit by COVID and everything came to a stop, what is it that kept you awake? And as a follow up, what is it that's giving you good sleep today as an investor?
Thanks, Rahul. I think that the defining feature of this crisis is that and this is something I wrote about pretty much a couple of months after the crisis broke out in March of 2020, is that unlike other crises which tend to turn the world upside down, and there's a major change after those crises, what this crisis did, especially from an economic perspective, is merely accelerate the trends that were already in place before the crisis. Now, what do I mean by that? Just take a couple of trends. One of them, for example, was digitization. We were already in the midst of a pretty strong tech boom, digital boom that was running through the global economy before the crisis broke out. And what happened after the crisis was that just the nature of the crisis was such where it accelerated those trends of digitization because of whether it was work from home or the fact that we just had to work on a more remote basis. So and also things like shopping online, so many trends which were happening, even things like gaming, a very popular feature amongst the young today. All those trends were accelerated by that crisis. So very unique in that way, because you look at past crises, they turn the world upside down. And the other trend that I spoke a lot about, in fact, in my previous books, was one of deglobalization. That how the world was getting more fragmented, the days where you could just have seamless trade and exchange of capital and even ideas, that was also going to be curtailed. That's something that I was writing about, and we're seeing today, as we see these supply chain issues beset the world, that the trend of deglobalization, there was already some of that happening right like after crisis, when there was so much skepticism about China and how much we should depend on other offshore centers. But the supply chain disruptions have only accelerated that. So these are just a couple of trends that I think are very significant, which is the fact that this crisis is not fully over. We're still feeling the after effects, but the defining feature of this crisis and distinctive feature compared to previous episodes is that it merely accelerated the trends in economic terms, at least, that were already underway, from digitization to deglobalization. And that's how I think that the world continues to move ahead. So sure, some of those trends will ease a bit, as like everything tries to return back to some normalcy. But the long tail effects of this crisis are going to be there, and it's going to be visible in the fact that these trends, which, if we thought that gaming was going to become very popular among the youth in 5-10 years, it has all basically sort of happened in 5-10 months in a much more accelerated way. If we thought online shopping was going to increase in a very, very significant way over the next 5-10 years, in 5 months, those trends got telescoped. So that is the distinctive nature of this crisis, that so many trends have just got telescoped in a short span of time, which would have otherwise played themselves out over many years.
So is that good for you as an investor? How do you see this?
Listen, I think for an investor, the landscape is always shifting. What you have to do as an investor is always remain dynamic. You can't be wedded to old theories and old notions. And this is the problem I find often with economic commentary. I mean, I wear two hats, which is that I'm an investor, but I'm also a writer. I'm driven a lot by macroeconomic trends. And one problem I often find with writers and journalists, and I've seen this, because I've done both now for 25, 30 years, depending where you take the counting data as. But I think that that we have to keep being dynamic. That the world is shifting, the world is changing. How are we going to adopt to that? So, as an investor, my job is to observe, analyze, and think about how the next 5-10 years are going to be. I don't think that I would classify any environment more difficult or anything like that. Like everything in retrospect appears easier. I wish that over the last 10 years, I had put more money into tech stocks. I had put more money into the United States. I wish I'd done all that, but that's done. That's in the rear view. I got to think about what the next 5-10 years are going to look like. And is anything I've learned from even a casual reading of history or observing events for the last 25-30 years is that every decade is different. Whatever is a very hot theme in one decade, we can come back a decade later and have totally forgotten about it and moved on to the next theme. That is the only constant I know, which is that every decade is different. Otherwise, so as an investor, as an economic analyst, or whatever role you have, the idea is to be dynamic and forward-looking to the extent possible.
So obviously, as an investor, and you've written about it, as an investor and as a writer, you have two different perspectives of time, where time sort of, as an investor, you look at the time differently. As a writer, you look at the time differently. How do you bring all these things together in your, let me put it, decision making? I'm trying to sort of to understand how you react to these developments. What is it that makes you think differently from others?
Yeah, I think that it's the same, I think it's the same time frame. The time frame is not different for me. But I'd say that there is a big difference, which I find between writing and journalism and, let's say, investing, which is that investing, I think, needs to have a contrarian bias to it. You have to think about the next 5 to 10 years. Journalism is often preoccupied with the present. It's caught in the moment, which is that, okay, this is the hot story today. This is the hot trend today. How do we play it up? How do we talk about it ad nauseum? Because this is what is, popular today. So I think that that's what I think is the framing device which has to change. And sometimes I'm conflicted with that, because I know that a popular column is often one which talks about the current, the zeitgeist. This is what it's capturing. Investing is about being ahead. It's about the next 5-10 years. It's about talking about stuff that people aren't onto today, because by the time everybody's onto a trend, it's too late. The valuations reflect it. So I think that it's very important that way. In terms of the time horizon, for me is like I try to sort of do the same thing, which is that I try to, the analysis I have for investing, I apply even for my writing, and therefore I'm able to do the two together and live life in parallel. But I think that the big difference I find between journalism and investing is that one is very caught up in the moment, and the other one, to be successful by definition, has to be much more forward looking.
So when you look at the world today, what are the three big challenges that you see that we have to go through to get to a point where we get a feeling at least that we are back to where we were and things are back to normal, and the direction that we are moving in?
That'll never happen, Rahul. Like, because it all, the biggest cliche is that this time is different, or these times, these are interesting times and these are challenging times. Those are cliches, like talking about the weather, like it's just that, oh, it's a hot day, it's a cold day. Yeah, so what, right? It is what it is. It's what you make out of it. So I'd say that because 3 years later, some other crisis may come up. Yeah, and I see these polls come out of what are global investors' top concerns, or even people's top concerns, and that thing keeps changing every 3 to 6 months. Who knows? Now everyone is very worried about a potential conflict between China and Taiwan. That's boiling up. I mean, if that were to get, even the pandemic look like something something not as sinister. So I think that there's always going to be challenge. There's always going to be new things. And I think that both as investors, writers, things like those geopolitical events, I think are very challenging, because you can't model for it at all. You can try and model for some variables and hope that there is some predictability to those. As the old saying goes, that forecasting is difficult, especially about the future. So that is always difficult. But when it comes to geopolitical events as that, which have potential binary outcome, which is that nothing can happen for 5 years there, nothing. The same noises, saber rattling can go, or something can spill out of control. Like something happened, the World War, especially the First World War, came out of the blue. Nobody had any clue that this was being set up, and all of a sudden it happened. On the other hand, you've had so many false warnings. When I started out my writing career nearly 30 years ago, you will remember that the Soviet Union was collapsing back then in terms of that. And the biggest fear that people had out then was that, and Margaret Thatcher, in fact, would articulate that in her private meetings, is that as a last gasp, maybe the Russians will launch a nuke or do something to try and keep the country together, or try and mobilize things together when everything was falling apart. So that fear was very real. We look back at that now as some golden era, that the world, the end of history, and the new world order with one superpower and things like that. We look back at that. So one of my favorite lines I always use is that history is better remembered than lived. So the past always appears easier, the future always appears like it's challenging and stuff like that. But that's just a rather long-winded way of saying that that there are challenges. There will always be challenges. Top of the list just now, I guess, has to do with things like the China-Taiwan conflict. It has to do with things, the fact that all these governments have put in so much stimulus that as those stimulus effects wear off, what's going to happen? Is there going to be a fiscal cliff where all of a sudden these effects disappear and the global economy is not able to withstand it? Or is there going to be inflation just because there's been so much money printing and so many supply dislocations that last for a long period of time? So those are the top concerns today, and there'll always be some concerns. So my point is the fact that we're never going to ever be at a resting place where we feel that everything is fine. There are always going to be shocks, surprises. That's what economic, financial, human history is all about.
So we always have to be awake. We can't sort of start falling asleep and say, okay.
I mean, you can deal with it either way. You can sleep through things and wake up and say that what was the point fussing about all of this, because nothing, nothing fundamentally changed. The best investment for the last 10 years was that you just bought tech stocks in the US and you slept, and you did not keep awake looking for every wiggle and trading everything out. That would have been the hands down the best winner. On the other hand, like the India story has, seen so many ebbs and flows. Like virtually every couple of years it changes. Sometimes there's distress, there's like panic. Like at this time last year, there was so much distress about the Indian economy. Now, I think there's a bit of giddiness, at least among the investing class, about the tech boom and the new unicorns coming up, the new listings coming up there. There's a fair amount of giddiness out there about that, okay, China is fading a bit on the tech scene, and maybe this is India's time on the tech scene. And a lot of foreign investors too are piling in India on that notion. So, as I said, that you can be asleep if you're on the right trade, or you can be awake and keep getting whipsawed all the time. There are no such set rules, is my point.
So you talked about every decade being different. And you've written in one of your columns, let me quote, competition and churn lie at the heart of a functioning capitalist system, which is why the giants of one decade so often deliver such underwhelming returns in the next one and shrink in the popular imagination. So, who are the big guys who are not going to be seen in the next decade?
Yeah, so this is like a research which we did, which I found very fascinating. That if you look at the top 10 companies in the world, let's say on 1st of Jan at the start of every decade, and you compare the top 10 companies, like in the subsequent decade, just top 10 in the world by market value, just compare it. What you find is that any decade, the typically top 10 companies in the next decade fall out of that. So like of the 10 companies which were there, let's say in 2010, on January 1, 2010, compared to the top 10 companies which were there on January 1, 2020, right? 10 years. I think with the exception of Microsoft, all the other 9 changed. So that's just the way it is, which is the fact that that is creative destruction for you, which is that once you get to such a high level, such a rarefied zone, for you to be able to keep sustaining that momentum is very difficult. And so things fade. So today's top 10, or this, what we started this decade was dominated by all these FANG companies and things. In fact, these are companies I spoke about a lot in the middle of last decade as being a big trend. But my sort of hypothesis now is that these companies have, their past is in the rearview window, if history is any guide. And there are clouds gathering around them, whether it's regulation, just the negative publicity, or just competition. It is circling. It's taking longer than it used to because of the platform effects and the fact that the governments unwittingly support these companies to remain in such a monopoly power. But I think that there is competition circling. So I, as an investor, am looking out for new things, looking out for the companies which are likely to do well this decade. Because history suggests to me that these top 10 companies, and including many of these giants, only 1 or 2 of them are likely to be to deliver any significant returns over the next 10 years. A lot of it is already in the price, a lot of it is already well documented. So the top 10 companies in the world today are very well known. These are predominantly the tech giants of the United States. And I think that in the next decade, these companies are poised to underperform rather than outperform. And that's what we're doing. And in China, we've already seen it, which is that they went after the tech companies out there, thought they'd got too powerful, too big, and were making extraordinary margins. And what a mighty fall that they have had, and so quickly. They've lost more than $1 trillion in market value over the last 6-7 months. That's a staggering fall.
So interestingly, I don't see you on social media, which is where the world is. I presume that's a definite choice, by choice. It's not something that at a time when everybody wants to drumbeat, everybody wants to have their own little echo chambers, everybody wants to be seen saying it's something, participating. What keeps you out?
well, you don't have to personally be on social media, but I write, whether it's the Financial Times or elsewhere, who put you out there, who do that bit for you. So I think what keeps me out is the fact that it is very, very taxing for me to just be out there as much, because I have a day job as an investor that keeps me occupied. I have a real passion for writing. I write one column every 2 weeks. I'm writing books as well, and being on social media for me, being in any media means a certain research discipline that I'm not. It's very personal choice. I'm not for just going out there and just posting a comment. I want to do it in some research backed way. And so for me, the issue is one of engagement. If I want to engage with something, I want to do it to be the best, to play the game at the top level. I want to write a column. I want to write it at one of the best platforms, and I want it to be very widely read. And I want the writing quality and the research quality to back that up. So similarly, being on social media, I know that that's where like so many people are there. But I find that in terms of, it just would mean like I have to be prepared for that level of engagement. And that's what I'm just wary of. But nothing changes. I may still forced to do that, but luckily for me, I have organizations who I write for or speak here who will do it for me. So I may not be personally there, but there are organizations, if you engage with, who will do it for you. So it's not maybe optimal, it's not the best, but I have to make a personal choice in terms of time allocation. That what is it that I want to do and how engaged do I want to remain? And I'm pretty engaged. I'm pretty out there in making public comments. But if I'm going to be on social media, then it needs to be a professional project for me. That's just a personal choice.
Okay. No, that's understood. I think while a lot of people are on social media, there definitely are many who aren't, and this is a personal choice you make. So, coming back to bit what we were talking about, uh, you see a dramatic way in which large technology companies have virtually taken control of several aspects of our society, economy, politics, national security. These were for the longest the exclusive preserve of states, governments. And obviously, there is a clash, and you pointed out correctly what happened in China. Uh, at the same time, and then you said it rightly, governments also use these organizations to perpetuate, their narratives and their thought process, and also engage with people. But this is a kind of an internal battle that's only going to grow because people are going to have to take sides and make choices whether they want to continue doing what they are or they're going to regulate and bring them to a stop. How do you see this battle turning out? And how do you think this battle between technology and government is going to, I mean, these are non-state actors at the end of the day. How do you see from a very geopolitical, geoeconomic view, impacting the economies and the markets and politics of the world?
Yeah, the government's role in our society, in our economic life, in most parts of the world, has only been increasing, including in Western democracies, because government regulation has gone up a lot, government spending has gone up a lot, and also you have so much more intervention now, whether it's by central banks or it's to do with uh, governments bailing out companies. So the government's involvement in society as a whole has gone up significantly over the last few decades. So in a way, we are already we are far away from a pure capitalist model. We have already moved to a model where the government's involvement has increased a lot. Having said that, I think that there is a fundamental problem with these companies having gotten so big and so dominant. And I think that this has something to do with, I think that the way the capitalist system has been distorted, which is the fact that I think that you need much more data, like democratization. You can't have data so much to preserve of these large companies. So the government has to get smarter and savvier about greater opportunity and data democratization, and also in terms of doing less for bailing out companies. I feel that one of the biggest problems we have today, and which keeps these companies so large, is when the governments are all constantly providing stimulus, constantly bailing out anybody. because they're so scared that if something falls, the whole system may come crashing down. So I think that is what the government's priority needs to be, which is not to, become another player in this so much. It's already got a very expansive role, but how to right size its role and do things in a more targeted way, whether using technology, but also to promote democratization of opportunity and not have so much power vested in top. Because once these companies become so big, it's very hard to break them down. And because it's just too hard. The disruptive effect is too hard. Their lobbying power becomes incredible because they have so many resources at their disposal to be able to lobby against people. So against anyone who wants to go against them. So I think that what we need is much greater democratization of data, much greater internal opportunity for the small and medium-sized enterprises. And we need the government to stop playing such an active role of bailing companies out. That, I think, is the fundamental issue for me. That what's become so distorted about capitalism. Why are people in countries such as the United States, if you see the polls here, so many youth, and this will be unbelievable to us from India, so many young people here are more attracted to socialism than capitalism. That's because they have not experienced the socialism that we experienced growing up in places like India and have such a distaste for it. On the other hand, they've seen the way capitalism works over the last, let's say, 20 years in places like the United States, which is in effect socialism for the rich and the powerful. That every time somebody is rich, powerful is beginning to go, or whether it's an institution or a company is beginning to go bust, the government steps in there. So then their demand is the fine. Okay, if the government's doing this for them, why not for us? Why is it not providing us a much bigger social safety net? So it's like a negative feedback loop that these countries have gotten into. That for me is a real concern.
But how do you resolve this contradiction? Because governments obviously, fear, but they also have their own agendas, and it kind of works very well. In your view, and which are the governments who are actually willing or look willing to tackle these issues, and which are the ones that are not?
Yeah, I think that, like I've written a lot about my favorite country in the world, which is Switzerland. I feel that it gets the balance correct between having government intervention and having the right size welfare state, and yet providing incentive for people to do the right thing, to work hard and earn their money and not lose more than half of it to taxes, like some of the European countries do. It is the richest country in the world. It is a top 20 economy in the world. So this is a pretty serious model. So I think that you're very correct, that I think it's time to look at countries, and also it's one of the happiest countries in the world. I think that for me is critical. Which countries are happy? It's a very soft, fuzzy indicator, but which, at the end of the day, what do we want people to be? We want people to be happy. And you find that the happiest countries are also some of the most well-off countries as measured by indices. So Switzerland for me is a shining example of a country that's been able to get the balance correct. Then you have countries like, then you have like examples, even countries like Taiwan. I mean, in terms of, or even Korea, they're able to do a pretty good job at this. Taiwan is a place that I think has been the biggest economic miracle for me over the last 50, 60 years in the world. Along with South Korea, in fact, in my first book, Breakout Nations, I labeled these two nations as the gold medalists, that there were hardly any countries that were able to sustain a growth rate of 5% or more for more than 5 decades. And here were the two stars that were able to do it. And these countries, it's very interesting, that counterintuitive to what we think. In Taiwan, Korea, the size of the government is not too big. Government spending as a share of GDP, in fact, is below what other countries are in that income bracket. So I think that you're onto the right thing, which is that we have to figure out two things now. One is that which are the countries where capitalism is working, and where people are happy at the outcomes. Not like in the United States, you still find that more people today think the country is headed in the wrong direction than the right direction. That's a troubling statistic for you in terms of no matter what else is happening. I mean, I've been a big bull on the United States. I think it's the comeback nation. You never write it off. That's fine. But fundamentally, at the core, the fact that more people think this is moving in the wrong direction is a problem. That's not the case in the likes of Switzerland, Taiwan, and other places. So I think those examples to look at. The second thing, which I think we all have to think much more about, is that what sort of government do we need for the 21st century? we today have a government which is still sort of, a 20th century government, which is still trying to put band-aid on different places. But like it's like that old line goes that the road to hell is paved with good intentions. So the intentions may be good. Okay, let's bail X out. Let's put more taxes on the rich. Let's do that. But the outcomes are all very perverse. And that's why you have declining productivity in so many of these countries, including the United States. And amidst this incredible tech boom of the last 2 decades, productivity has been relatively low. And that's a problem.
So, how important are the social indices for you when you look at economies? How do you weave that in your decision making?
The single most important criteria for a country is its per capita income. That all social indices tend to be very highly correlated to per capita income and growth in per capita income. So if you look at a country's access to healthcare, a country's access to good education, a country's strength of institutions, lack of corruption, all those are very correlated to per capita income. So the higher the per capita income, the less is corruption and the more is the access to all these goods of life that we aspire and seek to. So that for me is the most important thing. Then the issue is the fact that how do we get there? How do we get to high per capita income? What are the factors which lead to high growth? And that's what I focused on these so-called 10 rules of successful nations that I've written a lot about. How do we get to those that outcome? So yeah, in terms of social indicators for me are very often a fallout of a country's wealth, a country's per capita income level. It's not the other way around, which many people think, that you get social indicators correct and then a country's well-being improves. It's often the fact that a country is rich or countries getting richer, its social indications improve. You have more money to spend on those essential and life-enhancing goods. So I'm very focused on per capita income growth, and what needs to be done to get that going.
When you look at smaller countries in Asia and elsewhere, some of them seem to be doing well, and especially in India's neighborhood, you have a Bangladesh which has suddenly come out from, people didn't know it, but it existed till some time back, and worried about a country like Bangladesh. But what is it that the smaller countries have, which is more advantages than bigger countries in terms of, okay, so bigger countries are complex countries, they have problems, but what are these few things that make these small nations shine than
It's big or small, because as you know, the biggest success story in the world in the last 50, 60 years, I mean, I mentioned Taiwan, but among the big countries has been China from an economic perspective, a very big country, very successful. Japan before that, relatively big, not as big, obviously, but quite successful. So I'm not sure that it's big versus small, but I think what's true, and even in India, if you look at it, so interesting, right? Which is that, and these sort of graphics have done the round, which is that Pakistan used to have a higher per capita income than India or Bangladesh in the 60s and 70s. And then how Pakistan completely dropped off, India took off, and then Bangladesh of late has taken off even more. So that's why about India, I've always had this line, which I keep using, that it's always in the middle, that it's a country that consistently disappoints the optimists and the pessimists. So yeah, we can look at Bangladesh on one side, but there's Pakistan on the other side. That how Pakistan used to have a much higher per capita income than India in the 60s and 70s, and then today no one takes Pakistan that seriously as an economic nation. Bangladesh has got a lot more attention in the last 5-7 years or so. But the common factor historically, so it's not big versus small, the common factor historically which has worked for economic development, and I think the Indian policymakers are very well aware of that, is that typically the success stories among the so-called low-income countries have always been through exporting your way to prosperity. That you make manufactured goods, you're able to employ a lot of unskilled labor in making those manufactured goods, and you're able to export those in a big way and earn the income to rebuild the economy more. That's the feedback loop which has worked. So I think that in that regard, the likes of Bangladesh, even more so, Vietnam, which I've written about, is emerging as the next China. These economies have been able to do that more successfully. Now, what leads to you being an export powerhouse means much better labor regulation, much better infrastructure to transport the goods. It's creating an ecosystem for that. And as you said, India is a complex country. To create that ecosystem for that is much more difficult. The politics is also not always aligned in terms of reaching those outcomes. So I think that is the issue as far as India is concerned. But historically, it's not been big versus small. It's really been much more about the fact that which countries were able to make these competitive manufactured goods and export them in a big way, earn that income, and be able to climb the development ladder.
So we'll come back to India in a bit, but before that, and I mean, let's talk about the favorite elephant in all rooms today, which is China. I mean, it's amazing how that country has gripped our minds for so long, whether for good or bad. I mean, you just can't live without China. You can't live with China. You can't love it. You can't hate it. I mean, it's again a very, very, very weird kind of a relationship the world today has with China.
Yes.
But it's a reality that it's shortly going to be. I mean, it is the second largest economy in the world. It has huge trade linkages with just about every country, and these are countries which are trying to sort of set themselves up as anti-China and provide that kind of safety wall that they're looking at. How much does China worry you?
I think China for me has always been a different concern. China is now, the worry has been the whole debt issue in China. I think that that is its one big fault line, which is the fact that it has created this economic miracle, but it has been funded a lot by an incredible amount of debt. If you look at China's debt numbers today as a share of its economy, no country in the I think in development history has taken on so much debt as a share of its economy to grow. So this is what worries me about China today, that its debt levels are very high. And how is China going to negotiate that? What's going on out there? Can there be an accident? Because so far they've managed it. All the debt is internally held. They're able to manage that debt. But can something happen which falls between the cracks? Could that, major global implications? So I am, much more interested in China, the economic story, how that's changing, what is on Xi's mind. Is there a big thought change going on there where like he's much more concerned about things like wealth and income inequality than about just growing now? What does that mean? Because even the one area of the Chinese economy which was able to shine through this entire debt issue was the tech economy. The digital economy in China today is a staggering 40% of the overall economy. There's no other major country in the world with I think a similar share, and that's all private sector led. But now like they're concerned about the concentration of power there and what's going on. So I'm much more concerned about those kind of issues as like as far as China is concerned. And obviously there's the Taiwan issue, but as I said at the outset, we can't predict that. But I'm very focused on that. So for me, the big concern is that about China rather than anything else. Other factors are, there are enough geopolitical people out there who can worry about and say that. But I think from an economic perspective, that is my main concern as far as China goes.
So, I mean, you made a good point that they have managed their debt domestically. That obviously is more helpful than if they would have had a very high external debt.
Yeah, I think that's a basic economic rule.
Yeah.
That but you don't know what that's doing to productivity internally. So there's no crisis because you're able to manage debt internally. But then you end up creating so many inefficient companies loaded up on debt, so many zombie companies that you just don't know what's going on in terms of as far as productivity is concerned. And we have evidence to clearly show that productivity in China has declined, especially in the old economy over the last 10 years or so. So I think that we are all trying to avoid crises, which is fine, but there are insidious effects, corrosive effects of such debt buildups, which are less obvious to the eye, but are still undermining the economy.
Let's talk a bit about India. You have talked about India in many of your books. Almost every book you've mentioned India in some way or the other. India is a bumpy ride. We are doing well. We can do better story all along. The general thought process is that we are probably at a point in time now where the journey from here is going to be very different and more fruitful from an economic point of view than it was, because the government has taken some tough decisions, whether it is privatization, whether it is bringing certain laws, etc., etc., etc. So from here, where do you see India going? I mean, where India is at this point in time, do you think it is poised for that kind of a growth rate that one expects it to actually deliver on and has not delivered, except for a brief period of time in the early part of the century when you were nearly touching, double-digit growth?
Yeah, I think that our reference point needs to just change. And this is what, again, I was speaking a lot before even this crisis broke out, that we are now living in an era of deglobalization. We are living in an era now of also a demographic shift. We forget that historically for countries, population has contributed at least one third to half of the overall economic growth. The reason why some of these economic miracle stories happened was because they had a strong increase in the working age population, which they were able to capitalize by making it very productive through getting them into manufacturing industries and producing goods. But it's a combination of the two. Demographics is a necessary but not a sufficient condition for high economic growth. So even in India's case, now the demographics have shifted. The demographics across the world have shifted. See, the global economy saw growth rates which was so high for 40, 50 years after the Second World War, because there was a baby boom around the world. There was a massive demographic surge. India was very much part of that. Now, some countries never converted that demographic surge into anything as far as economic growth was concerned. But the few countries which were able to convert it all had very good demographics for that period. So in India's case, also now the demographics have shifted. Before the crisis I'd written about in 2019, there were hardly any countries in the world that were growing above 7%. And there were even just a handful of countries growing above 5% even. That's very different than, let's say, 10 years ago, or in like in the 2000s, when we were still riding the tailwind of the demographic wave around the world. I think at the peak of the boom in 2007, they were like, 80, 90 economies growing at a rate of more than 5%. That's a staggering number. But now the demographics have shifted. Even in India's case, the population growth, the working age population growth has shifted dramatically. I think that, like each household was, producing whatever 5, 6 babies or something in the 50s and 60s. That's down to 2 or so. Now there's a big shift. So for us to keep anchoring our projections to what was achieved in the 2000s or the 90s is just wrong and is misguided across the world. Even like the United States now, for example, a growth rate of more than 2% is considered a very good outcome. That was, whereas you still had people like Trump and all lost in the past who would talk about the fact that why can't we grow at 4, 5, 6%? You don't have the resources to do it anymore. China has, has negative working age population growth. So it can't do it either. And similarly, you have, countries like Japan, where in fact it's very interesting that Japan has a declining population in absolute terms. But there's no big social unrest out there because in per capita income terms, things are still going up a bit. So we have to adjust for that. So I think that the days when India could grow at a sustained pace of 7, 8% are over. Unless we do something really dramatic on the productivity side. I mean, but that's over. So if we thought based on the reforms that we were expecting, we could do it 7, 8% in the 2000s or the last decade, I think the new normal for India now is 5%. If we can do about 5%, that's a relatively decent outcome on a sustained basis. Forget the pandemic effects where you'll get base effects. One year you'll contract, you'll be the sharpest, contracting economy in the world. The next year you'll be the fastest recovering economy in the world. Forget the base effects. The sustained growth rate for the next 5, 10 years for economies like India, anything above 5% will be an achievement a year. And we will need massive amount of productivity enhancing reform to do anything above that. That is the base case.
Okay, I think we're running a bit short on time, getting close to it, but we have some time. So one question for you. Where do cryptocurrencies feature in your life?
Well, I've been relatively optimistic on Bitcoin and cryptocurrencies. Like for much of last year, I spoke about it. I even wrote a column which I think, created a bit of a flutter, and a lot of strong comments I got about how, the fact that the dollar's days are numbered as the world's reserve currency. The dollar's already been the world's reserve currency for more than 100 years. Rarely in the history of the world has a currency been so dominant for more than 100 years. I went through the history that if you look at the last 500, 600 years, it's very rare for countries and currencies to remain that dominant. And so I think that, there is a space opening up for something new to come. Now, historically, what would happen was that it's some other country's reserve currency that would gain dominance. That's how the US dollar came after the British pound. That's how the British pound came after the French currency, and so on and so forth. Today, the problem is that no other country seems to have a financial market system which is as robust, and no other country, like China, for example, has the policy credibility or has an open capital account which could make its currency more widely used. And in the breach steps in the cryptocurrency world. So it's very hard to know. I mean, like it looks all frothy at times, valuations look stretched, but it is very, very hard to know when this stops. But it does. I do think the cryptocurrency world has a future. I think that ecosystem has a future. People are looking for alternatives. The faith in the US dollar is like ebbing. The money printing by central banks is still huge. And so therefore, I think that is a very important point to keep in mind. So yeah, I'd say relatively more optimistic than cryptocurrencies. But again, I'd said that even a year ago. Today, obviously, when everything is already bubbling up so much, you're a bit more tentative about it. But I do feel that things have a future there.
The governments will allow it?
I think governments have no choice now. They're being forced to co-opt here. This is well beyond what governments can do now. It's become pretty big. Governments can try and create their own digital currencies and do that. But this phenomenon is well advanced governments.
Right. Great. So thank you. It's been a great conversation. And thank you for agreeing to be at Puffy. It's taken a bit of convincing for you to do, for us to get you in here, but fantastic. Thanks a lot.
Yeah.
And I'll quickly now hand over to my colleague Vishy for his word of thanks. And Vishy, all yours.
Thanks, Rahul. Thank you for asking those very pertinent and engaging questions, as always. But more importantly, I must say, Richard, that it has always been a pleasure watching you. As we said in the beginning of this, it was interesting that 20 years back, Rahul, you and I wrote for the same paper, which is the Economic Times. So one has watched you very closely.
30 years ago, Vishy, 30.
30 years ago, yes. Sorry. So one has watched you very closely, and as always, it's wonderful to see you as a commentator, an investor, a thought leader, and I think all of which did come out now when you were having this wonderful discussion with Rahul. I certainly, when you talked about how India should look at now in the long term, what a 5% growth was something which one hasn't heard before. It's certainly something which I think we should look at, and as industry, one should also consider that in terms of what you have said. Several new ideas I think came up, which is worth debating. I do hope we will get you back sometime. I know it has. It won't be very easy, as Rahul said. It has not been very easy, but we would certainly want to have another conversation with you revolving around so many things that you have actually brought up. So thank you very much for your time. Ram, thank you for your opening remarks as well, and for being here. Thank you, Rahul. Thank you very much, Ruchir, and thank you, everybody. And I would like to thank the delegates. I would just ask them to continue to just be there. We have another interesting session coming up with the Indian ambassador to US. And I think that should be an interesting session to watch as well. Thank you very much, and wish you a good day, Ruchir, and a good evening to people here in India. Thank you very much.
Thank you. Thank you.